Tēnā koutou katoa. Ngā mihi nui kia koutou katoa. Good afternoon from Auckland. My name is Murray Bruges. I'm the director of the Helen Clark Foundation. Thanks for joining us today. The Helen Clark Foundation is a non-partisan, member-supported public policy think tank focused on developing long-term solutions to New Zealand's key policy challenges. Through our partnership with WSP in New Zealand, we've produced a range of reports focused on sustainable urban environments over the past nearly 6 years now. Our latest report is another compelling and comprehensive effort by the formidable Mercier, our Foundation's Deputy Director and WSP Fellow, and it explores the crucial role of residential insurance in New Zealand's efforts to adapt to climate change. And that report is, of course, the topic for today's webinar. I'd like to acknowledge our wonderful partners at WSP, whose support and expertise helps us produce these excellent, impactful reports. And as always, a very warm welcome to our Helen Clark Foundation members. If you're not a member of our foundation and you find these sessions valuable, you can sign up to become a member at our website, Helen Clark. That's all one word, helenclark.foundation. It takes around 60 seconds. And if you sign up this week, you'll receive a free book based on foundation research. So it's a great time to join. For those of you who haven't joined many of our webinars before, as we always say, note that your cameras and microphones are off. There's no risk anyone can see you or hear you eating your lunch. That doesn't mean that you can't participate, however, quite the opposite. We very much hope you will submit questions for our panelists by typing them into Zoom's Q&A function, which you can find at the bottom of your screen. And later in the webinar, I'll put those questions to our panelists. You'll see there's a separate chat function. We use that section to put links during the webinar, but please put your questions in the Q&A function. And finally, before we begin, I want to acknowledge the awful news this morning that the Honourable Nikki Kaye, former Minister of Education and Deputy Leader of the National Party, has just passed away. Our foundation's had a little bit to do with Nikki in recent months and found her to be very generous with her time and insights, and her passing is a huge loss for New Zealand. So let's get into today's webinar. We're thrilled to be joined by a truly stellar panel of public policy experts, and I'll invite them to introduce themselves shortly before Carly gives us a summary of her report. After that, we'll get into the panel session proper, and at around 10 to 2, we'll get into your questions. Just to note, we've got a slightly longer webinar period than normal. We're going through to about 2:15 to make sure we've got time to address your questions today. But for now, if I could ask the panelists to please each introduce themselves, starting with the Honourable Kris Faafoi.
Kia ora Murray and kia ora koutou to everyone who's on the call this afternoon. I'm Kris Faafoi, and from April of this year, I became the Chief Executive of the Insurance Council, the representative body of the general insurance industry. Our three strategic priorities are the bread and butter regulatory work that we do for our members, but also affordability and resilience. So the topic that the Foundation is hosting today is right down our alley. So we'd like to thank the Foundation for bringing us all together. Thanks, Murray.
Thanks, Kris. Jonathan.
Well, kia ora, everyone. Thank you, Murray. Thanks for organising this webinar. It's a great pleasure to be involved. I'm an Emeritus Professor of Public Policy at Te Haringa Waka, Victoria University of Wellington, and I've had the pleasure of being involved in work on climate change issues now for several decades, and particularly adaptation issues over the last 4 or 5 years. So it's my pleasure to be here. Thank you.
Great to have you. Thanks, Jonathan. We'll go to you, Richard, next, and then Carly to you, and you may as well go into your summary from there.
Kia ora, Murray. Kia ora koutou, everyone. My name is Richard Woods. I'm the Service Line Leader for Risk and Resilience at WSP in New Zealand, so dealing with natural hazard and climate risk projects. Thanks, Carly.
Tēnā koutou katoa. Thanks for having us along and joining us today. Very excited to present the findings of our latest report, and hopefully that is just sharing now. 1 second while I work out what I am doing on the technology side. Great, so I'm going to talk to you about this report, Premiums Under Pressure. We decided to look at this topic this year because, as you will have been very much aware, there's been a lot of, well, increasing number of climate change related events, or events that have been intensified by climate change around the world. Last year in New Zealand, we obviously had those two really big flooding events with the Auckland Anniversary Day floods and the Cyclone Gabriel as well. So we've really been actually noticing in our day-to-day lives how climate change is starting to affect us all. Meanwhile, prices for our insurance have been going up. Some people have been having to drop their insurance because of the increasing cost already. And so it seemed like a really great time to get into this issue, which I think has not been having a huge amount of attention from the policy side, especially recently. So I thought it was a good chance to really bring up some of these issues and see where we're headed in terms of premium prices for residential insurance. So many houses are already vulnerable to flooding. About nearly 15% of houses are already vulnerable to flooding in New Zealand, some flooding, and about 5% of houses are vulnerable to what they call extreme levels of flooding, which means basically a 1 in 20 year return period for flood risk. A lot of people are vulnerable to more than one type of flood risk. River flooding is the type of flooding that impacts the most number of homes, but coastal inundation, and especially the increase in coastal inundation caused by sea level rise, is the hazard that's going to be increasing most quickly and having the biggest impact on our premium prices in the near future. So the greatest number of houses exposed to river flooding are in places like Auckland, Christchurch, Lower Hutt, Napier, Palmerston North. And then the places where the biggest percentage, I guess, of houses exposed are in places like Buller District, Thames, Coromandel, Wairoa, Central Otago and Gore. So those are the places that would have probably the biggest impact on their communities due to river flooding. Sea level rise is the one that's having the biggest impact on our premiums, or will do in the near future. Just a very small amount of sea level rise is going to have a huge impact on the return period for major coastal flood events. So regions with major coastal urban areas that are likely to be seriously impacted by sea level rise by 2050 include places like Bay of Plenty, Hawke's Bay, Wellington, Canterbury and Otago. Right, so where are we with insurance premiums right now? We are finding prices are already high and rising. They've been going up around the country, but especially in places that have both flood and seismic risks, places like Wellington and the Hutt Valley and Christchurch, for example. So you can see the black line here is the dwelling is the cost of residential insurance, and the blue line is the construction cost index. So insurance premiums have been going up faster than both the consumer price index and the construction costs. So there are a range of different reasons for price increases in premiums over the last few years. One of them is that obviously inflation has happened and made construction incredibly expensive for insurance companies, so they've had to reflect that in their prices. But also reinsurance prices have gone up. So reinsurance is, for those who don't know, insurance for insurance companies. So insurance companies go to the global markets and get reinsurance for some of their biggest risks. So if we have a major disaster here, insurance companies will go to reinsurance, to their reinsurance to cover some of those costs. So reinsurance companies have been having a bit of a think about global weather events and have been reflecting increasingly large weather events in their premium prices. So events like floods in Northern Europe and Spain, and the hurricanes in Florida. That's all sort of filtered down to us a little bit in terms of our premium prices as well. Similarly, those big weather events we had at the beginning of last year in the North Island, I think have been a wake-up call to reinsurance companies about the risk in New Zealand of weather events. Up till now, they've been mostly focused on the risk of earthquake events for New Zealand, but now they're seeing that weather events are also a major thing in New Zealand. So all of that's having an impact on our prices, as are increasing government levies for fire and earthquake cover recently. And then finally, Something else that's been pushing up insurance prices is a move to risk-based pricing for flood risk. So this means that rather than the flood risks being shared collectively, they're being put onto the people that actually have the risk. So this is due to improvements in data and technology. So insurance companies are able to say, oh, actually this house has got twice the risk of this house, so we're going to charge them twice as much in terms of flood risk premiums. We've always had risk-based pricing to some extent for earthquakes in New Zealand. So if you're in Wellington, you'll be paying a lot more than if you're in Auckland for earthquake risk. But that's been flattened to some extent by the fact that we have the NHC, Natural Hazards Commission, used to be called the Earthquake Commission. So we have flat, what they call community-based pricing for earthquake hazard under the NHC, which flattens some of the risk-based pricing that we would otherwise be seeing for earthquake risk in New Zealand. Flood risks are mostly covered by private insurance in New Zealand, and up till now they've been mostly community-based pricing, which means we collectively share the risk. But some insurance companies are now starting to move towards risk-based pricing. So that means for those houses that are at some flood risk, their premiums will be going up very quickly and very steeply. And this has sort of already started to happen. So rising prices, as I said, prices have already started going up a bit, and we've noticed that some people are already starting to drop their insurance cover because of those prices. Over time, we're expecting many more will do so, or they'll insure themselves for less. So they might put up their excess, or they might insure themselves for a lower amount, which means they're not then fully covered in a disaster. And that's known as partial retreat. And partial retreat can be led by the customer who decides they want to try and save money, or it can be led by the insurance company that might decide they don't want to fully insure a particular property because it's not economically viable for them to do so. Another thing that we're likely to see in the future is this idea of unbundling of hazards. Sounds like a Christmas present, but it's not quite as good as that. So in New Zealand, we've got, traditionally we've had bundled insurance policies, so all perils policies. So when you buy a policy, you get covered for fire and flood and earthquake and other things. So in other countries, they do it differently. They might sell you your flood policy separate from your fire policy, for example. Florida is a really good example of that. So if you can get flood insurance there at all, it's sold separately and it's very expensive. So in practice, that means that many people don't actually buy flood cover, they just buy fire cover. And that's obviously a problem because the biggest risk for your property is the part that's going to cost the most. And so it's also the part people may not then get cover for. Yeah, so that could lead to problems in the future if we find people becoming underinsured against their most pressing risks. And then finally, insurance retreat. Over time, probably within the next decade or two, we're expecting to see insurance companies beginning to withdraw insurance cover from some areas entirely, especially in response to sea level rise, as I mentioned before. So that's known as insurance retreat. It's really become a problem overseas in some places. Florida springs to mind, but then another example is California, where you can't get fire cover in some places, wildfire cover. At some point for insurance companies, economically, it no longer will make sense to insure some properties. And we see, for example, in the United States, cover is going down steadily, partly for that reason. Now, high insurance cover is really important for a number of reasons. Firstly, it makes us more resilient as individuals, as communities, as a country. Christchurch earthquakes are a really good example of this. Back in 2010, 2011, they were actually the most heavily insured earthquake events in history, interestingly enough. I was really surprised to learn. And they were the fourth most expensive insurance event ever at that time. And although it didn't feel pleasant for many people who were involved in those events in terms of getting money back and rebuilding, it was actually a really good example of resilience, because we were able to rebuild as a country very well due to our really high levels of insurance. Something like close to 80% of all the economic losses were covered by insurance, which was a huge amount. Other reasons insurance is really important: house values. It's in everyone's interest to have high cover because it protects all of us. If you think about the fact that to get a mortgage, you need to have insurance. You need to show you've got an insurer willing to cover your property. The problem will really arise if insurers start to withdraw from some houses. Those houses will no longer be able to get a mortgage against them, so the market will go out of the bottom will go out of the market for those houses potentially almost overnight. People will struggle to sell their properties; they'll be worth next to nothing. That could have huge, social and economic impacts on people. Equity is a major issue as well. If we can no longer, if some people or some whole communities perhaps can no longer afford cover, that's really going to increase inequalities that already exist and entrench poverty for some, which is concerning. Oh yes, I just put this little graph here to show. This is from Belinda Story et al. And she did this wonderful little drawing that can help show us how in the 4 major cities, in areas that currently have a 1 in 100 year flood risk, return risk, within the next 10 to 15 years, we're going to see partial retreat, and within the next 20 to 25, we might see full insurance retreat for around 10,000 properties, and that's just in these major cities and just for coastal erosion and inundation at the coast. So it's a big issue. It's not a distant issue. It's on the horizon, coming up pretty fast kind of an issue, and we need to start thinking about how we deal with it. Check the time. Right, I've got to hurry myself along. So Aotearoa's insurance market is characterised by reasonably high uptake. We've got about between 84 and 95% of homes covered here, although it's actually quite hard to see based on the data how high it actually is, because that data is mostly kept by private insurance companies and not released publicly. We're quite high on international standards, but not as high as other countries, say France and the UK, for example, that have public flood insurance schemes in place. We've got we've got high market concentration, which means not that many companies over here. I think the top 4 companies own about or generate around 88% of private residential market. I talked about all perils policies before. That's a characteristic of the New Zealand market. And annual contracts, which means, and that's normal internationally to have annual contracts, but it does mean that the picture of the market can change pretty quickly within a short period of time. Another characteristic is we have the NHC, formerly EQC. It's a scheme that's greatly admired overseas. It's a scheme that's really seen us through some tough times in a really good way, and so it's pointed to by lots of people overseas and by reinsurers as well as a thing that makes them see the New Zealand market as somewhere worth investing, because it kind of gives a risk buffer, I guess. Right, and then we have traditionally we have community-based pricing for most types of risk. And that's helped through by the fact that we have the NHC, and I mentioned that before. We have flat rates for NHC insurance for earthquakes and some other hazards. Right, so do we need to intervene in New Zealand's insurance market, and can we justify it? This is quite a complicated, not very straightforward kind of question. The report works through it in some detail, and I really encourage you to have a little look at what it says in there. We've talked about the importance of insurance for resilience a little bit already. One of the things particularly that, climate change obviously threatens our fiscal sustainability as a country. So insurance is a way to pass the risk from individuals to the private market. And that can help the state bounce back after a big disaster and makes us more resilient as a country. So I think insurance is incredibly important, and keeping high levels of coverage is incredibly important. There are risks, though, to intervening in a private market. So moral hazard is often brought up. Moral hazard basically means that if you're protected from the consequences of a risk, then you have a lack of incentive to guard against it. So the idea is really that if you don't charge people full whack under risk-based pricing for their insurance, then they won't take the necessary precautions to reduce their risks. So price signals that reflect risk result in more efficient outcomes is the argument. I think the problem with that idea is often that it's not in a person's control to reduce their own risk, perhaps because, for example, maybe only the council can reduce risk for you because they need to build a big flood wall that is obviously not in your power to do as an individual. Or perhaps you could raise your house by a metre, but it's actually just not possible for you financially to do that. So I think we should probably guard against moral hazard, but we should also not give it too much importance. I think the importance of it can be overstated a little bit when it comes to the individual householder and what they're actually able to achieve themselves. I think often if we have risk-based pricing, prices go up, that's supposed to send a signal to the householder to do risk mitigation, but often it will just send a signal to them that they should drop their insurance entirely, which can have negative outcomes for all of us as a country. And then the fairness question, another really gnarly one, which I encourage you to engage with. It's such an interesting topic. What is fair in this situation? Some people might not be happy to help subsidise someone who has, for example, built $1 million home on the beach, who's now upset that it's falling into the sea. Is that fair to help subsidise them? I think the question here is really how much people can be held responsible or not for their decisions and for their own bad fortune. It's quite easy, I think, to blame homeowners for their own misfortunes, but often the picture's not that clear cut. So someone may have bought their house 30 years ago, for example, and not known about climate change at that point. Or they may have known about climate change, but not really understood what that would mean for them. Others may have bought an at-risk property because it was the only thing they could afford at that time. And so I think we'll see that a lot, people buying houses that are at risk because the prices are lower. So my personal feeling, I guess, on this one is that although all of us are a little bit to blame for climate change, none of us is actually individually responsible. And I think it's important that we share the burdens of climate change as equitably as we possibly can. If not, we kind of run the risk of creating, not to be too dramatic about it, a sort of a subclass of climate change refugees, really, a little bit like they're seeing in Florida at the moment, where there are a lot of people who can't afford insurance, whose houses are being repeatedly flooded, but who cannot move on because their houses, all their wealth was in their house, and their house is now not worth anything at all. Let's see what the time is. I am running over time as usual. I just find this topic so fascinating. How can we keep premiums affordable and accessible for longer? Well, I think one of the first things we need to be doing is setting up a really clear climate adaptation framework and funding that appropriately. There are things we must absolutely stop doing, which is building in inappropriate areas and inappropriate ways. We should be investing in a big way in flood mitigation in the areas that need it and where it's cost effective to do so. We should be making homes more resilient where we can, and we should be also putting in place proactive, consistent, fair frameworks for how some properties will need to relocate under a process of managed retreat or planned relocation. So funding that process as well will be essential. If we don't do those things, our prices are going to go through the roof much, much faster. If we do, then we've got a chance to have a bit of breathing room and sort of move towards the future in a more sedate way. So, as I mentioned, we can expect an increasing number of insurance gaps to arise over time. Some people won't be able to afford insurance, others won't be able to get it for whatever reason because insurance companies won't want to pay for uneconomically viable properties. So when a specific peril is or is likely to become uninsurable, a government can decide to form a protection gap entity, which is essentially a not-for-profit entity brought about through government legislation, which can provide insurance protection to fill the gap, the expected gap. Now, we already have, obviously, such an entity, the NHC, which functions very well, but doesn't, at the moment, cover flood risk, except in a very small way for land risk. So if we were to decide to set up a public insurance scheme for flooding, we could look to expand the NHC to take on flood risks as well, or we could look to set up a whole new entity. there's myriads of different ways that we could look to set up a public insurance scheme, and the report doesn't settle on one or another, simply because there's so much more policy work and thinking that would need to be done to decide on the best outcome. But we can look to other countries to see what they've done, and many of those are covered in the report as well. Basically, there's a spectrum. You can intervene a little bit. You could get private insurers to do something like what they've done in the UK with Flood Re. Private insurers have banded together under government mandate to insure just those properties that are most at risk of flooding. Or you could go all the way to what they've done in Spain or France, which is where all flood risks are covered by a public insurance scheme. So there's lots of different ways we can do it. I think that conversation needs to be had very soon as to what we're actually going to prioritise in New Zealand. The French flood insurance framework was one I wanted to point out just very quickly. What I really like about the French flood insurance framework is it's triple-pronged. It has insurance, it has reinsurance, and it has risk mitigation built into the scheme. So there's community-based pricing for everyone for flood risks. But in order to make sure that people don't keep staying and living in houses that are repeatedly flooding over and over and costing everyone an awful lot of money, they have a risk mitigation scheme, which is funded by a premium on your by a levy, sorry, on your premium. Sorry to rush through this, but I'm just going to jump to the last slide, which is the key recommendations. So there's several dozen recommendations in the report, and this is just the top level 4 of them. I'll just quickly rush through these just to sort of give you a sense of what's in the report. Firstly, we've talked about the importance of maintaining high levels of insurance for flood risk, particularly in the face of climate change. So under that recommendation, we think we should establish an expert advisory group to explore how that can be best achieved, and part of that should be to come up with a definition of what constitutes affordability in insurance. You know, we have a proud history, I guess, of helping people who are struggling to afford important public services in New Zealand. Should we be helping people who are unable to afford insurance in the same way? That's the question there. The second recommendation is about investing in physical things to keep insurance premiums affordable and accessible. That means things such as avoiding further inappropriate developments in risk-prone areas, which we just talked about. To do that, I think we need to give councils greater powers to turn down land use consents, for example. We should also be investing in proactive flood risk mitigation and so on and so forth. So in order to do that, we really need legislation. We need some kind of Climate Change Adaptation Act, which sets out who should make decisions about adaptation, when they should make them, what are the risk thresholds that we need to act on, and most importantly, who's going to fund it all. If we don't fund it adequately, we're going to have inequitable outcomes, because some areas are going to have good flood mitigation and some are not, because they won't be able to afford it, which is going to end up costing us all more in the long run. Thirdly, we need to consider a range of really specific interventions in the market. I think we should be thinking seriously about subsidising some people to make sure they don't give up on their insurance. I think we should also be looking at things like thinking about whether insurance contracts should be standardised and simplified so people know what they're insured for and what they're not insured for. I think we should be monitoring insurer conduct and value for money in policies. And I think importantly, we should also be agreeing on the level of transparency that insurers must demonstrate in how they make decisions about pricing. I think increasingly with risk-based pricing, there's the risk that insurers will be making decisions on information that we're not privy to, and we should have some kind of recourse about that. Finally, we talked about the idea of a public insurance scheme. Not straightforward to do that, because flooding is fairly common, fairly predictable compared to earthquakes, and it is going to get worse over time, so it runs the risk of being quite expensive. So again, we need to make sure we've got a really clear climate adaptation framework in place to make sure that that scheme does not become too expensive. I'm thinking of an example I read in the United States where a house under the National Flood Insurance Protection Scheme has been rebuilt 32 times after flooding. I think it was within a period of 34 years. We do not want to see that here. We want to see a scheme that is actually sensible and sustainable for the long term under climate change. So that is a very whistle-stop tour of the report. I thank you very much for listening. I hope that was enjoyable, and I look forward to hearing the panel discussion.
Thanks, Carly, and hats off to you for synthesizing such a complex issue into your excellent report. So now we're entering the structured discussion portion of today's webinar. I'm going to put 4 or 5 questions to each of our panelists today, and a reminder that shortly after that we'll get into into audience questions. I already see some are appearing in the Q&A section, but please do put questions in there as they occur to you. And note also that you can vote on other people's questions. And the more likes a question gets, rises to the top of the list, and it's more likely to get asked. Okay, so the first question today for our panelists, and Jonathan, I'll ask you to go first. I think you've all read Carly's report, and you've just heard a summary now. Do you agree with the problem definition as set out by Carly? Do you see insurance as a problem as it sounds in the context of climate adaptation? And what do you see as being the biggest challenges arising in residential insurance from your perspective? So over to you, Jonathan.
Well, thank you, Murray, and thank you, Carly. Thank you for an excellent report and a really good summary. I agree with much of what you are recommending. I'd just like to underscore a couple of things. The first is that we ensure that we integrate any insurance arrangements with effective adaptation. And as you say, Carly, that must include avoiding additional risk in the future by preventing people building in areas that are going to be flood prone or subject to sea level rise. Secondly, we need to ensure that we have a policy framework in place to move properties that are going to be highly at risk of damage, particularly from sea level rise, out of harm's way, and we have a process by which we have some kind of compensation, at least for some of the property loss and damage that will entail. So that really is absolutely critical. I agree, Murray, with Carly's perspective that climate change is going to increase the risks we face to property damage going forward. Globally, at the moment, the economic losses from flooding and climate-related risks such as wind and hail and fires and so on is now running in the tune of hundreds of billions of US dollars a year. That's a global figure. And insurance losses, according to Munich Re, in 2024 are likely to be in excess of 100 billion US. And that figure is going to continue up over the coming decades and beyond. And at some point will become a trillion or even trillions, probably by the end of the century, on an annual basis. So we're faced with unprecedented circumstances in which climate change is going to contribute to very extensive property loss and damage. And in that context, I completely agree with Carly that we need to think about how we, in particular, ensure that we can maintain high levels of insurance coverage in the interests of resilience, economic and social resilience. And we need to think carefully about the range of options that we have available to us, particularly in relation to flood damage. So happy to say more about what I think about some of the possible options in due course, but in broad terms, I agree with Carly's enunciation of the nature of the problem we face. I agree with her that issues around equity are really important, and that if we don't make policy changes in the near future, we're going to be faced with declining insurance coverage and particularly increasing the inequitable access to adequate property insurance cover. Thanks, Murray.
Thanks, Jonathan. Richard, same question to you.
Thanks, Murray. So for me, the biggest challenge for residential insurance is really understanding the problem comprehensively. Insurance just isn't about flood risk or those hazards which are impacted by climate change or climate risk going forward, but it's also understanding our earthquake risks, our tsunami risks. We've got our major city built on an active volcanic field. We've got the whole South Island sits on the margin of a tectonic plate, and we've got a subduction zone that's 20 kilometres below Wellington. So how do we understand that with an increasing exposure going forward? If you go back to the 1920s and look at how many residential properties we had exposed in Auckland and look at that now, the impacts of the Auckland Anniversary Day flood events would have been significantly less back in the 1920s than it is now. So a little mantra that I've got is that we're building more things in risky places faster than the climate's changing itself. So we're very good at understanding how our climate might change and those hazards which are impacted by that through time and publishing data on that. But are we as good at understanding how our exposure is changing and understanding that each time we're making an investment decision, whether that be for residential property or infrastructure, that we're accepting a certain level of risk associated with that. So my emphasis there is really trying to understand that broader picture and really considering how we are understanding our exposure over time as well.
Thanks, Richard. And finally, to you, Kris, how does this issue look from the insurer's perspective?
I think Carly and the team at the Helen Clark Foundation have done a really good job of kind of prescribing the issues that we have to face. You use two of my favourite terms, gnarly and fascinating, because it is a gnarly issue. And I think we've got to balance real risk, so the risk that New Zealanders face, and the market risk that we're here talking about in terms of the kind of dependence that New Zealanders have on insurance. We do have high levels of market penetration. New Zealanders have depended on that in the last 24 months. We've had two large events that have showed what can happen quickly when a market responds that is highly insured. But I think the reality of it is things are going to become more frequent and are going to become more severe. That's a given. One good thing is we're not alone in this. Every other nation is in this too. But the reality of that is that they're also, from an insurance perspective, fighting in a reinsurance market to maintain a level of capacity and affordability of reinsurance. So we've got these kind of global factors feeding into price, and as Carly and the team have pointed out, there are also some domestic factors that go into pricing too. I think we want to make sure that the level of and the affordability of insurance is maintained. New Zealanders have got a great relationship with it. I think the big challenge for us is to have some real certainty about the policy settings and the framework and the investment in the infrastructure that actually mitigates and reduces the real risk that communities face in order for all parts of the system, including insurance, to be maintained, and for New Zealanders to make decisions about where they live and where they might not be able to live in the future. And there are a lot of enablers that need to be implemented to do that, policy-wise and investment-wise. And I think we'll get onto those. But I think the government and other parties in Parliament, I think, seem like they're aligned on some of those enablers. And I think we're all waiting with bated breath to see what that looks like and to see if we'll have certainty to give New Zealanders certainty, not just in an insurance sense, but I'm sure there's lots of local government people watching this webinar today as well, but they are looking for the framework and the protection to be able to go out there and make some decisions in order to reduce that real risk.
Thanks, Kris. It sounds like all our panelists are agreed that we're faced with a gnarly and a fascinating problem, and that clarity around the policy framework by which New Zealand will be addressing that gnarly and fascinating problem is going to be increasingly important. So I guess turning to this question of climate adaptation and what we need to be doing as we look at a future where we know we're going to see more intense and more frequent flooding events and sea level rise and coastal inundation. So there are physical things that we can be doing that will help us prepare for that and will help keep insurance premiums accessible and affordable for longer. Could I ask each of the panelists to reflect on what you see those kind of key actions we should be taking are, and what are the kind of the opportunities and challenges that surround that? So let's start with you, Richard.
Thanks, Murray. Ultimately, for me, it's this idea of comprehensive risk management. It's acknowledging that right across society, right from an individual homeowner, right up to government, that we have responsibilities for managing natural hazard risk. And that's through your home preparedness kit at home, your land use planning at local government, spatial planning. And insurance is just one part of that equation. So it's taking a step back. I use designing urban stormwater systems as an example, and I know that a lot of people might not agree with the approach of putting it in the framework of using return periods, but if you look at conventional stormwater systems around New Zealand, they're typically designed to about a 1 in 20. So we've mitigated that. If we get rainfall up to a 1 in 20 year event, we've mitigated that. Up to 1 in 50, you'll actually notice that the stormwater system might become overcome and the roadway will flood, but not habitable floors. And so we've got this framework whereby we're actually enabling the road to flood until that flooding will subside. To support that risk management framework, we have to have good traffic management plans in place to ensure that we are managing that risk appropriately. And then within the Building Act, we've got things so that we're not having habitable floor levels flooded up to a 1 in 50 year. If you go up to 1 in 100 year and 1 in 200 year, you're starting to see risk management options such as flood protection schemes or bringing in parts of land use and spatial planning to manage that. And then anything above that risk that we've managed, we tend to just kind of default to civil defence emergency management. But there's also personal responsibilities and understanding if you're living within a hazard area, that you understand the signs that you'll need to evacuate in certain instances for flooding, etc. So it's actually stepping back, and for each of those hazards, understanding what is that kind of spectrum of risk management options that we're doing and what's the optimal ones, and most importantly, what level of risk management interventions can we afford? And I think transferring some of that risk via insurance is only part of that discussion. And if we can actually step back as a country and have a solid, robust, holistic and comprehensive risk management discussion, and then what artifacts sit in to support that, I think that's one of the most important opportunities we've got going forward.
Thanks, Richard. Same question to you, Kris.
Kind of similar approach to Richard. I think there's been quite a lot of talk of what needs to be done. I think what I'd like to see is some discussion about the enablers of that. You know, we talk about building infrastructure. Well, okay, where's that funding coming from? If it's not all going to come from government, where is the capital flow from outside of New Zealand to enable that to happen? Another one, a lot of responsibility looks like it will be put on local government. What protections are we putting in place for local government to have the freedom to make those kinds of decisions and not find themselves tangled up in legal battles, which will prevent a lot of things that I think the community might need to see happen, but might see them spending more time in courtrooms as opposed to making decisions that we need. I think having a look at some of the questions that are coming through on the chat, it's pretty clear that data and clear and agreed data in order to have that really solid decision-making base needs to be agreed. That's a real bugbear for me. When we were speaking to the FEC Select Committee group, I think you could spend a lot of time worrying about what data we have. I think we just need to start with something and then iterate over time in order to enable some of these decisions to be made. So I think there's been a lot of debate about what needs to happen. I think the frustration behind some of that is what enablers, what are we doing to enable some of those decisions? And the biggest one really is the central government leadership in terms of the framework for the decisions that need to be made for natural hazard risk reduction. I'm not saying that it means that everything lies on central government and local government. I actually think all sectors need to lead in. At some stage, I'd like to take in another webinar like this and have the banks there, because we're talking about asset value as well. But as insurers, we want all of these things to be addressed. We are happy to be part of the debate. We don't want insurance premiums to be the deciding factor, because we think there is a lot of work to be done to maintain the level of kind of certainty to people about the homes that they're in and the communities that they're in. So for me, I think there's plenty of infrastructure that we know can be built, but you've got to have the channels in order to make those things happen. And again, I have confidence that we're heading in the right direction in the policy. We wait with bated breath to see if we can all dive in once we've got that framework to figure out how we make those things happen.
Thanks, Kris. Can I ask Jonathan or Carly for any quick reflections? We're getting a little squeezed for time, so if you've got any quick reflections from either of you on that question, please.
Well, look, very briefly, I agree with most of what Richard and Kris have said. We certainly, as Richard says, need a comprehensive risk management approach. But with respect to climate-related risk, plainly over the coming decades, flooding is going to be the primary source of damage. In the longer term, sea level rise is going to come to predominate. And in dealing with sea level rise, the main solution is going to have to be relocation. So, Murray, the critical thing we need for the longer term is the means to move people out of harm's way who currently occupy properties that are going to be exposed to sea level rise. And that, in my view, means we've got to have a funding framework that provides adequate funding, ideally for preemptive relocation, along the lines proposed by the expert working group on managed retreat that I was a member of, and which reported to the Ministry for the Environment last year. So that funding framework, in my view, is absolutely vital. We also need funding, obviously, for infrastructure, as Kris was saying, and for protective structures, where those protective structures are cost effective and are simply going to increase residual risk in the future.
Thanks, Jonathan. Anything from you, Carly?
Yeah, I'd just reiterate what the other panelists have said there. I think what's really crucial, as Kris mentioned, is the enablers to get this stuff happening, which means legislation for climate, how we're going to adapt to climate change, who's making the decisions, what are the risk thresholds at which we would make a certain decision, and when that decision's been made, what are the actions that we would then take? What kind of risk can we tolerate at a personal property level and at a community level? What can't we tolerate? And most importantly, though, how we're going to fund it. I think that's been the sticking point, and that's been the thing that's held us up for several years now. We're going to have some commitment to get some funding on the table so that we can start. We know what we need to do. We need to start actually doing it, and to do that, we need money. And I think a lot of local councils are going to really struggle to pay for what needs to happen, and we need to be thinking about a lot of that funding coming from some kind of national adaptation fund and being allocated according to need. So I think that needs to be happening quickly. We need to get cracking.
Thanks, Carly. I think, again, a lot of agreement between the panelists, particularly as it pertains to the importance of funding and clarity around when that's coming and from whom, as well as the fact that everyone here has a responsibility as we look to move to, as we adjust to a warming world, and how we try and manage risk in that context. So third question for the panel, and if I could please ask panelists to keep their responses brief on this one. The report proposed setting up some kind of public flood insurance scheme, though it wasn't particularly prescriptive about what that scheme might look like. If we were to set up a scheme, a public scheme, what kind of things should we be aiming to achieve, and how, and what should we be trying to avoid, and how might we avoid the particular pitfalls? Are there any particularly good or bad examples from overseas that we should be cognizant of as we consider the applicability of a public insurance scheme for New Zealand? Jonathan, why don't we start with you, please?
Well, briefly, Murray, the first thing, which is, in my view, absolutely critical, is that we maintain a high level of insurance penetration and do so in an affordable and equitable way. So those are some critical factors, but we must also ensure that whatever kind of scheme we design, particularly with respect to flood insurance, that it doesn't operate to undermine the incentives for adaptation. So we need an integrated, comprehensive scheme that is sort of mutually reinforcing. There seem to be very quickly three broad options, and they're all open to objections. The first would be to develop a separate scheme for flood risk, separate from our current EQ cover through NHC. perhaps along the lines of flood re in the United Kingdom. The second would be to include flood risk as part of the EQ cover that's currently provided for earthquake risk and many other natural hazards, but with separate arrangements. So rather than having a first loss arrangement for flooding, have some other approach for flood risk, recognizing that flood risk is a different type of risk to, say, earthquake risk. And the third would be to redesign our current NHC system completely, perhaps moving away from first loss arrangements to perhaps co-insurance or full cost, full risk recovery coverage, I should say. There's a range of options there, but they're all unfortunately open to objections. I personally don't have a strong preference one way or the other. We can look around the world and very quickly we can see a raft of schemes. The French one that Carly mentioned has some attractive features because it's trying to integrate these key issues of ensuring affordable insurance with incentives for adaptation in the face of changing risk profiles. So I'll leave it there, Murray, but I do think we as a country need to have a proper, rigorous debate about this. And as Carly has proposed in her report, it would be sensible to have some kind of high-level investigation by relevant experts to consider all the feasible options and make some recommendations.
Thanks, Jonathan. Kris, it would be really interesting to hear the Insurers Council's perspective on this one.
Yeah, look, I think this question is being asked on the premise of affordability, which I think is a fair question. And I think before we think about designing something new, if it's affordability we're looking at, then look at what's driving affordability issues now. I'm not sure if everyone knows, but about 40% of an insurance premium is actually NHC levy, fire and emergency levy, and GST. So there are some domestic factors that drive insurance premium and affordability there, as well as the likes of reinsurance. I think having just been to London and spoken to the likes of Flood Re, I would agree with Jonathan that if we design something, it can't be at the expense of what actually needs to happen to reduce real risk. I think that's the lesson learned from Flood Re. When we spoke to them in London, they're concerned that while they've sorted out a market problem by the establishment of Flood Re, there's been complete, or I won't put words in their mouth, it seems that there's been an inaction in the adaptation space. So effectively the communities are no better off in terms of the risk that they face. So be careful about defining the problem you actually want to fix, and you need to build things or put measures in place to reduce actual risk for communities.
Thanks, Kris. Richard or Carly, any thoughts from either of you before we move to the next question? Not from you, Richard. Carly?
Yeah, I mean, I just agree with what Kris said. Then we need to be reducing real risk. I think equity consideration should be really key in any scheme that we establish. I think we really want to avoid large swathes of the population becoming impoverished or unable to move from their house because they've lost all their value in their house. I think a key part of that means we need a really proactive approach to manage retreat, as Jonathan mentioned before. Some form of public compensation for people when they're forced to move, I think would be really essential and will save us money in the long term. Although it looks like an expense up front, it will make us more resilient as a country in the long term and be well worth it. And I think the other thing we need to be doing right up front is making a really clear decision about whether we favour risk-based pricing or community pricing. To what extent do we think people should be individually carrying the burden of the impacts of climate change, and to what extent do we think we should be sharing those responsibilities as a country? And I would say, from a personal perspective, I think we should be sharing them because we're individually not responsible for climate change, but we've all done a little bit towards us, but by driving our cars around the place. So I think we should also be looking to share those burdens. And I think that can work. I think schemes that do share the burdens, do share the flood risks can work and be affordable, but only if we do that within a really clear climate adaptation framework that can mean that we can reduce the prices. If we keep rebuilding houses over and over, that's going to be unaffordable. Let's not do that.
Thanks, Carly. So some pretty clear themes coming through there, including the importance of maintaining high levels of insurance penetration and of the fundamental importance of whatever action is taken in the space, not disincentivizing adaptation efforts and actually reducing real risk to people and property. Okay, question number 4. The report talked about several things we could be doing, areas that require more analysis. One option is subsidizing insurance premiums for some people. You could also look at more standardized insurance contracts, or improving transparency around pricing, or promoting high levels of competition in the insurance market. So I'm just going to ask panelists to reflect briefly on whether they see merit in these ideas or not, or whether there might be other interventions that could be made here. So let's start with Richard, please.
Thanks, Murray. I'll be really brief. So I really focus on transparency, particularly in this data-driven world. So if insurers are looking at going to risk-based pricing, it's the ability for that premium holder to actually ask questions of what that risk-based pricing constitutes, what proportion of your premium is flood risk or seismic risk, if there is an additional premium for each of those hazards. We know that there are no consistent flood risk guidelines in New Zealand for the development of flood hazard maps, for example. It's an area that I'd certainly like to see us progress, or a government to invest in, and do that from a multi-hazard perspective as well, to provide national guidelines so that we have consistent natural hazard information to make better informed decisions going forward. And then if insurers are using that information to do risk-based pricing, that it's available and clear and transparent in terms of how that information is being used.
Thanks, Richard. Kris.
I agree with Richard in a lot of areas there. I think that consistency of information for making based decisions around risk is really important. Of course, some of the members of ICNZ will have another layer of data that they might be using for their own underwriting methods as well. So that's always a balance, but I think some certainty on an absolute base case, and as I mentioned before, building on that. I really do think, though, that kind of tackling the adaptation measures and the real risk will be the biggest driver of underwriting for insurers. They will respond to the risk that's in front of them. If they see risk reduction or risk mitigation in communities being put in place, then they will respond. I think we need to be careful about what that response is, and in saying what that is. It might mean that the level of increase might not be as steep, because I think there might be an assumption that things will be cheaper, but as we see increased risk and increased frequency, maintaining that affordability and availability is really important. But again, I feel like a bit of a scratch record that work on the real risk will see the equation applied by insurers change, because the actual risk is reducing.
Thanks, Kris. Jonathan and Carly, quick reflections from either of you.
Look, 2 or 3 things quickly, Murray. The first is we have to recognise that New Zealand faces relatively high natural hazard risk. As Richard has said, we have a lot of risks from natural hazards, and that has driven up the price of insurance. So by international standards, certainly by comparison with Europe, residential property insurance, for example, in New Zealand is very expensive. In France, the insurance coverage, the insurance cost might be about 1/3 of what it is on average compared with New Zealand. And going back to Kris's point about the substantial size of the NHC levy that people pay, which is capped at $480 in countries like Spain and France, the average amount that people are paying is around $60-70 New Zealand. So vastly less, and that reflects this difference in natural hazard risk. So key point about this when it comes to subsidies is, given the very high cost of insurance in New Zealand, there is arguably a stronger case on equity grounds for having some kind of subsidy regime. And the question then becomes, among other things, do we go for kind of implicit subsidies through community-based premiums as opposed to risk-based premiums? Or do we have some kind of explicit subsidies, as we do, for example, in many other policy areas, where poorer people receive some additional support or they're not required to pay as much? Or do we have some mix? And I'm not going to answer that question now. I'm not sure what the best answer is. The problem is, whatever we do, there are potential downsides and potential costs.
Thanks, Jonathan. Let's very quickly touch on our final question, because I'm very keen to get to audience questions. I'm going to put this to the whole panel and ask if anyone has a particular viewpoint that they want to express. It'd be great to hear, but please keep it short so we can get to audience questions. The final question is around the politics of all of this. Do we expect to see changes in the space in the near future? What are the next steps that we would expect to see at central and local government level? And do we need to convince the public that there is change coming in the space, or are they aware of that and largely on board? So question to the panel, brief answers please, and then we'll get into audience Q&A. Who's gonna take a shot at that? Richard, go for it.
Just quickly, so my recommendation is to engage with the process, because these discussions are being had and there are opportunities. Today, there is a submission open for DPMC on building resilience to hazards. What do we need to do as a nation? So please, after this meeting, go and quickly write your submission to get in on that process. In regards to the public, for me, an endpoint here is if we can have a much better informed, educated public on how we manage that risk comprehensively, and that the public have responsibilities themselves as well as government, local government, that would be a much better outcome for us as a country. That's my brief.
Thanks, Richard. Any final reflections from the panel before we get into the audience Q&A?
If I could just say very quickly, I do think we have to address some fairly fundamental philosophical issues here, which Carly has highlighted. They're about, what do we think fairness entails? Do we want actuarial fairness and hence risk-related premiums, or do we want community-based premiums, which essentially make them more affordable to those who have the least? A second philosophical question really is the extent to which, in broad terms, we want to apply some kind of solidaristic approach to the flooding in the way that we have done for earthquakes and other natural hazards. And we need to, as a political community, address those issues, I think, head on and debate them through and try, if we can, to reach a consensus on the best way forward.
Thanks, Jonathan.
Yeah,
all right.
I just want
Kris.
to say one thing. Yes to the public conversation. I think it needs to happen. I think there's been plenty of talk in circles like this, but absolutely punters need to understand this, because it's going to be become very real for them soon. And I think they need to see a unified effort by sectors, the likes of Jonathan, with the policy heads, and also, cross-party consensus on this. It's a kind of burning platform for the next 20 or 30 years. And New Zealanders need to have confidence that everyone is kind of leaning into the problem.
Yeah, and the importance of consistency and predictability in terms of what the long-term response from central and local government will look like. Thanks, Kris. And stay on the line, please, because the first and most popular question today is directed at you. So a question from Helen. As a council, we are mapping natural hazards in our district. This is a costly exercise. As insurance companies move to risk-based pricing, they are likely doing the same. Is there an opportunity for councils and insurers to work together to fund hazard mapping? How would we best approach the insurance sector for this?
So absolutely, but I'll add another party to that, and that's central government. I think one of the big things that should come out of the adaptation work, which out of the recent select committee process, is absolutely a kind of fundamental baseline on data and risk modelling that we can all work from. I know we're kind of constantly getting requests from individual councils because modelling in one particular area of the country might be different to that, and it's really hard for us to be able to respond to that. So I think one of the most urgent things is that we do have a framework around modelling, an approach that everyone, all the councils around the country understand, that we can understand also, and then importantly that central government is happy that we're basing decisions off it. I think it's one of the most important things that needs to come out. Central government needs to show leadership there, so I 100% agree. If we're doing it on an individual basis, our small team of 8 will be putting in their resignations pretty quickly. So I think we need to have a unified approach to this.
Thanks, Kris. I've got a question here about marae in high-risk areas, which continue to face rising insurance premiums as climate events become more frequent, and the fact that makes maintaining insurance increasingly unaffordable, potentially with especially with risk-based pricing. Kali, I might put this to you, at least to start us off, based on your research. What is the main insurance issue for marae? How do we deal with it, and where does responsibility lie?
Yeah, good question. I'm not sure I have a very good answer to it. There are one thing that I looked at, which I thought was really interesting, was parametric insurance and how that can be used for communities. So parametric insurance is essentially insurance that clicks in when certain parameters are met, such as a certain level of flooding or a certain strength of wind speed, and it's not dependent on actual damage actual damage happening from the event. And I think parametric might be a really good one to look for communities such as iwi and hapu, who are trying to look after and protect their people from insurance hazards, because it's an insurance that can happen very quickly. As soon as the parameters met, you get the money, and it can be then dished out to people in the community. So I think that's certainly one to look and to think about for addressing community level risks. In terms of actually getting better insurance for marae, I don't have a really clear answer, but perhaps you do, Jonathan.
No, except that I think we may well have to think about bespoke arrangements for some aspects of Māori land and property where insurance arrangements aren't going to be adequate for the challenges that are faced. Perhaps because of ownership structures or the nature of the risk that's faced. But in some cases, of course, marae are going to have to be moved, and some hapu are already discussing that in various parts of the country. So that's just one of the many issues that are going to have to be addressed over the coming decades.
Thanks, Jonathan. I'll start this next question. I'll start off this next question by asking you to respond, Kris. I think I've got a sense of where you're going to go, but I'll put it to you anyway. Do you have any examples of evidence where insurance prices have gone down due to the presence and implementation of local climate adaptation plans? I'm conscious you warned us it might be a case of prices going up less quickly, but interested in your thoughts on that question.
Yeah. I don't, to answer the question precisely, not of down, but available and affordable. I think we've had a really good example most recently in South Dunedin, where the infrastructure built there in order to pump floodwater out meant that the event itself wasn't as severe for the residents of South Dunedin. We've got a known issue with flooding there. Of course, there were still some houses affected, but the mere fact that that infrastructure exists has meant that the levels of availability and affordability of insurance could be maintained. And again, off the back of that, there will be some claims, and to answer another question that's in the chat, there is certainly some scope to be able to build back better or build back smarter that need to be part of the wider adaptation conversation. But at the moment, with that particular event that has presented itself, insurers don't want to have that scenario where you're building back 32 times after an event. They want to make sure they're looking after their consumers and not going back and having repeat performance. It's not good for their customer at the end of the day, and neither is it smart commercially.
Thanks, Kris. It's a question here from James. Has there been analysis of the potential impact of unbundling and partial retreat on the ability to get a mortgage? That was something that I know your report looked at a little bit. Carly, you might have a perspective to start us off on that one.
Well, we haven't really seen unbundling happening here yet. I wonder if he's meaning overseas or not. That might actually be one more for you, Kris.
I haven't actually. I think that, sorry to be peddling an insurance sector, but the all perils coverage that New Zealand has is kind of New Zealanders have become to depend on it. Certainly in the discussion that we've had in the last couple of weeks in London, losing that would be not great for our market. So any way to be able to protect that and the understanding that New Zealanders have of that should be maintained at all times.
Thanks, Kris. So a question here about the accuracy of flood hazard mapping used by councils in LIM information. Councils are required under Section 44A of the Public Meetings Act to use the most recent maps available, even when these are out of date, inaccurate, and not designed for this purpose. And this cases in Napier, Nelson, and Bulls have highlighted these issues. Does anyone have any comment on flood hazard mapping and its accuracy or otherwise in New Zealand?
Murray, I think this is a really good example of the lack of national guidelines and standards that we have for managing a natural hazard risks. We have really good guidelines, well, really good in that we have some guidelines for the development of liquefaction maps and their applicability. And recently this year, we've had the same for landslide guidelines. We're currently working with a client on a regional council client on developing flood risk guidelines that match those same landslide and liquefaction guidelines. And that basically says for your resolution of map, the spatial scale, the accuracy, where they should be applied, whether that be spatial planning, land use planning, or are they applicable for LIMS. So if we can get some criteria and some guidance around what is suitable for application at those different scales, I think we'd be much better off it. If we can do that across all of our hazards, that's really going to inform how we manage our risk comprehensively as well.
Thanks.
So if they're interested, come and have a chat with WSP. We can probably help them.
Thanks, Richard. Next question. And we touched on this a little bit. Kris, you might want to just reflect a little bit more on this one. What proportion of insurance pricing is influenced by natural hazards / climate change versus the other considerations? Maybe if you just want to take a quick moment to kind of talk us through how premiums are calculated and built in New Zealand.
Yeah, well, there's the kind of, as I mentioned before, 40% of it essentially is out of our hands because that's levied in terms of the fire and emergency levy, GST, which everyone pays, and then also NHC levy. So the rest of it, I won't get into particulars, but a bulk of it then is just underwriting the actual risk in front of an insurance company. So traditionally, seismic risk has been the kind of overriding factor, and as someone mentioned before, if you're in Wellington, then that is factored in more deeply than in other parts of the country. But the two events of early 2023 really did, as Carly said at the opening, have reinsurers have another look at New Zealanders and reassess the climate-related risk. Now, just to put that into context, roughly every year, insurers were paying about somewhere between $250 million and $350 million out on climate-related events per annum. In the space of a month, $3.8 billion worth of claims were put in for two events. So you can imagine what the reinsurers globally were kind of thinking when they saw A, that engaged, and B, that they thought New Zealand was a seismic risk. The Reserve Bank did some research or some analysis at the beginning of the year. These things typically go in waves. When we have an event, the reinsurance costs go up, and then so does the insurance premiums. So there's a bit of rhythm here. But underwriters will look at the risk in front of them. If you're on a coastal property in some parts of New Zealand, you'll certainly pay more than someone who's not.
Thanks, Kris. And what may turn out to be our last question, this one comes in from Annette Bolton. It makes sense that everyone gets covered by some sort of insurance scheme, but who is working on or responsible for building the resilience protection measures that could also help properties? Things like nature-based solutions, the building code, and flood resilience that could be built into that. Carly, do you want to take the first stab at this?
Well, I think that's the problem. It's not really clear who's responsible or working on it, and in often cases, no one's really working on it. In some councils, I mean, local councils are really responsible for local flood mitigation and other types of adaptation responses, but are often not funded to do that, or not don't have the resources to do that. So what we really need is centralized legislation, which will set out who is responsible, who is going to make the decisions, how we're going to involve the community in that decision-making process, because that's a really key part as well. And then again, who's also going to fund it. So that needs to be set out in legislation and then enforced. Local councils would be doing the actual work, or regional councils in consultation with local people. But some things are already happening. Some places are moving, for example, towards increasingly making space for water and turning cities into sponge cities, which I think is great to see. But it's quite isolated. It's just in the places that can currently afford it. It's not systematic, and it's not targeting the places that are most at risk currently in the way that it really ought to be doing.
Thanks, Carly. Jonathan, did you have a...
Oh, just to say, we do have a climate change adaptation plan, a national one, which is in the process of sort of being implemented, but it's not perfect by any means. And we have a government that is committed to having some kind of climate change adaptation act, which hopefully will provide more steerage, if I can put it that way, to what local councils should be doing and what various other government departments are doing. But basically, build on what Carly said, we need a whole of government approach to this, and we're going to need some new funding and other policy instruments to ensure that we have the capability to do what needs to be done, the enablers, to use Kris's words, alongside what Richard has emphasized, the critical importance of good data, standards, appropriate standards for determining things like flood risk mapping and so on.
Thanks, Jonathan. So look, we're just on 2:15. So that will be the conclusion of today's webinar. Thank you very much to our panelists today, Professor Jonathan Boston, Honourable Kris Faafoi, Richard Woods and Carly Mercier. That's been a really well-informed discussion, some very thoughtful expert answers coming through. So thank you very much for joining us today. Thank you all to our audience as well for joining today. A reminder, please keep an eye out for the feedback forms from today's webinar. If you've got a comment particularly on the extra running time, 15 minutes longer, if you particularly liked or disliked that, let us know. And please do consider joining the foundation as a member. We would love to have you. Until next time, noho ora mai, mā te wā, and thanks so much for joining us today.